Okay. I'm still trying to figure out his volume stuff or why his mic's not working. But do we have any questions? I don't see anything in the stream yet, but just if you have any questions, just put it into the chat, and then we can go through some of this stuff. But in the meantime, this is kind of what you're looking at. This is one of my screens. I have a total of 3, and I don't really need much more than that. Usually only looking at one chart at a time. There's a lot of people out there who do multiple charts, but I'm usually just one. It's hard for me to focus otherwise. This is just Facebook, but if we're looking through some of this stuff, unfortunately, we're stuck at 720p in terms of the stream quality. Maybe the next one we can get something working better, but this is the first pass. So we're working on the stream quality, but it's just something we're stuck with right now. But if we're looking at any other questions? Okay, how do you time your entries and exits? I think it really depends on, for me at least, it depends on the homework I do the night before, the week before, the weekends, trying to understand what I'm trying to accomplish. I don't do a lot of day trades. I'm more of a swing trader or a position trader for some long-term positions, but I do short-term swings. So what I'm looking for is a level to usually hold, and I try not to front run. Sometimes I do, for sure, as it's just more of a gut feeling versus more of the chart. But I'm looking for a specific area to hold. So when we talk about levels, and we're like, I don't know, we were talking about 34.55 on Amazon today, but that's just an area. What you want to see is when it hits these levels is that you actually follow, it actually has follow through to the upside and doesn't continue downside. This is a common kind of issue when people first start trading, is they look at moving averages, horizontal pivots, cloud support, whatever it is these are areas that you always look for on the chart. That's going to be an area where you look for it to hold, but it doesn't necessarily mean it can go straight through, just like a hot knife on butter. It can go straight through. So that's what you're looking for. And how do I time my exits? My exits are more of the same. It's on the upside levels where we're looking at potential resistance, and resistance to me is just where you've seen prior volume kind of hit, where people are kind of trapped and they're looking to take out that pivot, but it doesn't necessarily have it. Essentially, someone bought in this level and you have it come back to that level. So people are starting to exit because after holding for, I don't know, a month, 2 months, 6 years, whatever that level is, it's just a place they're finally like, oh, I'm break even, I'm going to get out. And then they're going to watch it go against them for the next 6 months and curse today. But that's what we're looking for in terms of exits. And on the trades, because we do options, and options can change in 5 minutes, as you saw even today, right? We went from shop is a good example. Shop hit high of day and then immediately turned down. So the exits I try to time based on the trades working is usually I try to take off my capital once it hits 100%. And then I try to ride the rest all the way up, and I try to always scale out going up. It doesn't always work. I'm bag holding the shop calls right now and wasn't expecting that, but I'm also not risking my entire account on one of these trades or a handful of these trades. So what we're looking for in general for me is I try to only risk what I'm willing to lose on the trade. So that's just how I kind of manage it. Sorry. Yes, I know I'm sharing screen. Does any indicator give me more confidence and follow through? Indicators in general are lagging. They're always taking prior data or past history data and showing you what the future could potentially look like. I'm not a big indicator guy, but if the indicators line up with levels on the charts, it's what I'm looking for. So if you see a bullish MACD cross and you see the RSI diverging, those are all potential areas for me to kind of start looking to get long or short either way, right? If it's MACD on a bearish cross, you're going to be going down short. But that's what I'm looking for, as the indicators are kind of a future tense of where it could potentially go, but it's not 100%.
Can you hear me?
Yes, I can.
Okay, I'm sorry.
Random, how you doing? Felt a little weird talking to myself for a bit.
No, I was listening. I just, hey, everybody. Sorry about the technical difficulties. We're still trying to figure this out.
Yeah, and we'll definitely do more. Unfortunately, today TBI got called into a meeting for work, and he can't attend the session. But I'm sure he'll be on other ones moving forward.
So about Pincher, we'll cover that. I see a question about Pincher. I can show the setup, but let's do that the next time we do, and we might write a little write-up. I'm not sure if I can easily share the Pincher setup that I have.
Yeah.
Let's see.
While you're looking up the Pincher, the other thing that when you're looking at trades, just to finish that thought, is where are we in terms of time frames, right? So when you have multiple time frames aligned, the monthly looks bullish. Like for example, Amazon had a monthly hammer off a terrible earnings reaction. So that's a pretty bullish stance. It had the highest close ever. So what we're going to be looking for is how does it look on the weekly? The weekly also looks very, very similar. You've had a big reversal last week and follow through this week. So, and now we're looking for daily. And so we have the top two time frames in confluence in terms of bullishness. So what we're looking for now, that's why you see Random and I and TBI trying to find the bullish trades on Amazon, because there's multiple time frames lining up here. So pullbacks should generally be bullish moments where you can actually get in for cheaper. They're giving you an opportunity. At least that's our thoughts. And if it starts filling levels that we were expecting to hold, then we either stop out or we start to reduce size if we're going to try on the upside. So that's kind of how for most of us trying to handle it. And we're approaching seasonality, so it's going to be interesting, because I don't think seasonality has really mattered this year, but it's just something to keep on watch. You got that, Pincher?
Yeah, I think so. Let's see. Just turn on my screen, and I'll turn. Okay, and I'll turn you off for a minute.
Sure.
Okay, so what exactly the question is about Pincher? Do you want me to show you a specific setup, or let's look at Amazon, which I think was a recent Pincher. So basically what I'm looking for is, and this is something that's very common, and I apologize for this messy look, but it's just to illustrate what I'm looking for. So I'm monitoring two indicators. One of them is the PPO, and the time frame is on a daily chart. I'm looking at PPO, and it's a custom indicator. I need to look for the code if anybody's interested. And then I'm putting ADX against him. And ADX is the strength of the trend. PPO, I honestly don't really remember what it represents. But the idea is that you're looking for a daily pinch between those two lines. So you see how, the ADX peaked to the, peaked, and then at the same time, and in confluence with that, the PPO reversed. That's usually an indicator of a reversal after a significant sell-off. I can give you a few more examples. Let's look at What else was a recent pincher? I think A, B, and B. Let's see. Yeah, here's an indicator. So you can see how the ADX and the PPO are kind of pinching, and then shortly after you see the push. Now there is no guarantee how long the push would continue and how strong it will be, but that usually indicates a reversal, or at least a short-term reversal. Is that clear about the pincher, or any more questions? Yeah, this is random. No video.
I think there's some, we can come back to the pincher in a bit. I think there's some other questions that we probably need to go through as well, as we're short on time this time. But I think one of the questions was, will you be able to rewatch this video later? Yes, it'll be on our YouTube channel. And you'll be able to go back and any of these AMA sessions moving forward will be on the YouTube channel, so you can reference and revisit and look at the conversations that we've had over time. But this is just the first one. So one of the questions, I think it's to you, Random, is how do you find these setups? Through scanners or?
Sure. So yeah, that's a good question. So basically what I'm doing is I'm monitoring, let me pull another chart here. Oh, wow. MDB is at 456. Okay, so I've got two monitors, two screens like that, which I'm watching multiple charts in parallel. And then I've got another monitor where I'm watching additional things. My main time frame to watch intraday is 5 minutes. And what I'm looking for is I'm monitoring the 20 SMA on those, which is the midline of the bullies. So that's the major thing I'm using. If something is moving slower or it's been sold off or something like that, then I would typically reduce from 5 minutes to maybe 1 hour to get a bigger picture view. And I don't know if it's clear on the stream or not, but I'm just giving you an idea. So when I'm looking for entries or exits, I'm using let me just increase one of those monitors. Maximize cell. So that would just be a single widget as a full screen. How do I reduce this? We don't need level 2 here. Okay. So typical entry, there's multiple setups that I'm using, but one of them would typically be an opening range. So if I see something dumping at open and I see a very strong push that immediately takes the midline, then I'll potentially chase it, or I'll just wait for the 15 minutes opening range, which is the 3 first bars of the 5 minute, and then look for the breakout after that. Additional things I might do, and again, there is no, unfortunately, there is no, not always a structure to it, but sometimes it's an instinct. But I might look at the opening range and enter at the 50% pivot of that. That's typically a very predictable entry. If you have something that pushes strong at entry, it will fade either to 50% fib or the 61 extension. Additional things that I would do is look at pivots from previous day. So again, I'm using Beyond here, which is a little bit more cluttered, but just an example here, you can see a very clear trend line, something like that. Okay, so the moment that I see it hit here, I might jump in, or the moment it reclaims it, I will jump in and look for that. So those are just a few examples of what I'm looking at. Does that give you an idea of what I'm looking at, or did you have something more specific? So it doesn't explain what Aura B and how you guys use it, parentheses random, and where you fit the strategy. So The way I'm looking at this, it doesn't matter if it's a day trade or long term or a swing or anything. I'm looking for an entry which is ideal for that time frame, but potentially could be a longer term entry. That's why you see me sometimes picking up weeklies and monthlies and a few months out. If an entry is good, then it's a good entry for multiple time frames. The idea that, or the way I'm looking at this, is that I'll be looser on a longer time frame, so I don't. I'm trying to think how to explain it in simple ways. So I'll have more cushion or more. I'll give the ticker more rope if I'm taking a longer time frame. So I don't mind it dropping, a few more percentage from a specific point, and I might add to it if I have, time on my side. If I'm looking at weeklies, I'll typically look for something that would not work against me in a significant way. This is random talking. So there was another question here about
Fig and Duolingo.
So we have I put together on our website. There's a little write up on IPOs and IPO based setups. I don't know if you had a chance to read that, but take a look at that, and if you still have questions, Steve, then just DM me and I'll try to walk you through more details about that. But I think it pretty much covers what I'm looking at IPOs. What I can do is I'll give you a few examples here. So
while you're looking through, just one thing about IPOs, while you're looking through that, is generally around just over the years of doing this, generally around this like last quarter of the year, new IPOs tend to kind of run hot. It's like almost a chase for performance for these guys who are underperforming. And you look at some of these like names that we're looking at, they're also quite low floats. They're not the huge floaters like, but you'll see them in the past. We've seen the Palantirs, the Twitters. They run hard into the end of the year, and then Twitter, for example, takes another 8 years to return to all-time highs. But it's just the typical kind of IPO cycle. As we start to hit like September, October, you're going to look for the ones that are IPOs in the last 6 months, have like a small base where they can kind of launch from. So that's we have a weekly call as well, Steve, that we discuss this as a team to try to figure out the setups and potential trends. So that's how we also take a look at things. But it was just a list of charts that look good in the IPO space, 3 to 6 months, kind of a small base to kind of move from. Anyway, Random, you can go ahead.
Yeah. So and this is, I'm just taking the recent IPO that worked out phenomenally well. So that was Monday. The problem about IPOs is so typically popular tickers would get options available in about a week or a week and a half, and then but the premiums, nobody knows how to price those options, so the premiums will be crazy and they will fade with time. So what you want to look for an IPO base. Monday was, I think, one of the first one we grabbed, and what I typically look is a fake breakout. So you see a new high that fades, and then you typically see something that's like a fake breakdown, right? There is potentially a double bottom here which collapsed, but then it quickly recovered. So that's a first bullish sign. I think I got it somewhere around here, so it still worked against me. And then what you can see is then when you get a real breakout, the thing just goes and doesn't look back. Now, for performance-wise, I'm looking for at least 50% move from the range breakout. So while it looks now ridiculous, how did we not believe it's going to get to 400 when this thing was trading in the range between 220 and 240 only 2 weeks ago? Like the 400 seemed like a stretch. So when I'm looking at something like Duolingo, right, this is the trading range where we're finally breaking out from it, and potentially, if we're looking at a 50% move from here, so 147, if I take a 50% move goal from that, where's the, I think it's here, price range. So let's pull a 50% move that gets us to right 211. So that's kind of where my IPO-based target is. It could continue higher. It can continue. It can, just wither and die. Nobody really knows what happens. There is no really good structure around that, but it's definitely a high probability setup that's worth the trying it out. Sorry, that was actually a little bit off. So that comes up to 220. So I would take profits in various fib levels, but I would definitely hold it until it reaches at least 220. And if it doesn't reach there, then it doesn't. So it's part of the game. I think there were a few questions also on chat.
Yeah, there's questions about fib extensions and fib retracements. I'm not a big fib guy, so
I'm using a lot of fibs.
Yeah, I'll let you answer that, because to me, it's always a subjective point of where you start, where you go. So it's really dependent. And I'm personally in the camp of like intraday pivots and basically points on the chart where humans have bought and sold in droves, right? In general, you can take humans with algos or whatever you want to take, but essentially support and resistance. That's usually how I kind of do things. And I take ranges and add ranges to the breakout. So, for example, the Amazon range of this consolidation is 37.73 to 28.70. So when it clears that 37.73, it's about 1,000-point move from 37.73. If it doesn't get there, it doesn't get there, but that's the expected kind of measured move. So that's how I handle my kind of moves versus the fibs, but I'll let Random kind of explain how he does his fibs.
Sure, I switched a bit too late to your screen, so let me switch back to my screen. So, and again, this is where multiple time frame are being used, and I pulled an Apple chart simply because I don't chart on it too much, because I don't like to trade it. So that's a fairly clean chart. Or actually, let's use MDB. That's probably a better example. It's going to be a little bit messy, but so let's do a weekly. It's a good start. Okay, so that's my MDB chart. So there's a couple of things here. So first of all, when I'm looking at fibs, I'll take the last significant swing on weekly, right, which is from 428 to 238, right? And that's going to give me two targets, which are the 272 extension, which is at 480, and then the higher, the 168 at 546. So that gives me a significant, right? I like something that sold off significantly because that would give me a big swing higher. In addition, you've got the cup and handle, so that also gives you another measured move, right? And that would be more or less, let's say, here's the neckline. So there's a 150-point move potential here. And that would get you to, let's take it from the handle break point. So that puts you at around 530. So a reasonable range here would be anywhere between, and that shouldn't, not necessarily happens tomorrow, but on the longer time frame, on a weekly chart, your target would be anywhere between, in the range of 530 to 546. So that's a good target from that perspective, where you get confluence both of the fib levels and everything. Now, when I'm looking for exits, then I would zoom in, and I'll, for example, take a 1 hour chart, right? And then I would look for closer extensions, here's an example which is already charted, right? That's the last swing, which is the 393 to 325. It's still a significant swing, but that gives me, closer targets, which are more in play. And then in those cases, I'll even look at higher extensions from that perspective. And I usually chart things before open. That's why I provide those updated levels, right? So I might look at this swing. Well, it's not really helpful. Yeah, so I might chart. I don't think there's anything useful here, but tomorrow before open, I'll look at MDB action pre-market and post and after hours, and I'll try to get an idea of levels which are in play here. So Grace asked a few questions on the on chat. So I use Bollinger Bands as my go-to. So right, if I look at every one of my chart has bullies on it, so I'm using the 5 minutes. What do you call it? 5 minutes bullies on that, and I'm effectively using the midline, which is the 20 SMA on the 5 minutes, which is very useful. I use that as a very short-term, entries and exits. I think I answered both your question, Grace. I'm not sure if that was what you asked for.
So, Random, I have a question for you. How do you reconcile when the Bollinger Bands aren't expanding on the larger time frames and it's sitting on outside? Like, so MDB is going to be a good example. It's going to open way above any of the daily Bollinger Bands, right? So how do you reconcile moves like that?
Simple answer is I close my eyes and think of Great Britain. So, big, not a lot of, so highly liquid tickers would typically abide by the Bollinger Bands, right? They'll just, hang around and wait until the Bolli starts widening, and then they'll push higher. There are tickers, so I'll look at historical performance, right? I'll take, let's take this one. Let's put on bullies. Where's the Bollinger Bands? Here they are. Okay, and let's move to daily. All right, so you can see that, here's a good example. So it can push the bullies, push the bullies, push the bullies. So I wouldn't mind to see it push out, and then I'll look for an inside day to maybe, reposition my position higher. But I'll look at historical performance and see how it behaves around the bullies. I'll also sometimes use, the ATR, so Keltner channels, right? So let's turn off bullies and use, 1 ATR. So that gives you an idea that, this thing has no problem living within 1 ATR, but, 3 ATR is typically the top. So sometimes and I think I tried to do that on Google, not very successfully, is that most tickers do not go above 3 ATRs. So you can expect a fade. Here's an example, here's an example, here's an example. So typically when they hit 3 ATR, you can expect it to go back into the moving averages. So that's a good example for that. So tomorrow when we open, we'll probably open somewhere around here. So it's a good question. I'll look at the action when it happens to kind of figure out what makes sense to do at that point. It's very subjective, unfortunately.
Yeah, absolutely. I think the other question was, how do we buy out of the money calls? I think for me, and in Random, I think you'll answer it in your way, but I think for me is, what's the expected move, and what's the expected move in the time frame you're thinking. So if we're thinking in the next 3 months, the move is going to happen, and for example, MDB is 460, then we're looking at buying 460 maybe 2 months out, right? So you can capture a lot of the alpha. Those are low delta calls. Those are the ones that are going to pay hard if it works. If it doesn't, it's very little premium rate spent versus like if you had bought in the money and if it failed, right? So that's how I kind of handle it. I think the move is, for example, let's say beyond the move is to 130, then you buy the 125 calls. So, and what's the risk reward, right? So if your 125 calls are 30 cents and the 130 calls are 25 cents, it makes no sense to get the 130 calls for 5 cents. You get an extra $5 of movement. So that's kind of how, there's a lot of things that go into that question. And so we're usually really dependent, but it's always based on, for me, what's the expected move out of this specific break, this range break, and in the time frame I'm looking for.
Yeah, and I'm in a very similar excuse me, in a very similar boat. So I usually think about which targets I'm going to look for, and based on those targets, what's realistic, and I'll just figure out what gives me the best risk reward. I'll typically choose strikes above. So, for example, right, we've got all-time high at 428. So I'll never take 430 as a strike, because you can expect some consolidation around fib levels or around vertical levels. So think about, you're holding an option, you've got 3 weeks for expiration, so you don't have time pressure, and then it goes $2 in the money, and then it goes $1 out of the money. So the swings become more significant, and you start doubting yourself. If I see such a significant potential, right, there's a mega cup and handle on the weekly, which is, that's typically preceding a significant move. Excuse me. Then I will be looking to buy something which is out of the money. So those, jitters around a specific level or around a specific fib cluster would not be as significant, right? It would 10 or 20%. The moment it clears, right? That the moment we clear 330, then this thing is is an all-time out breakout, and it will have enough Momo to to run a significant amount. So that's another thing that I tend to take into consideration when I'm looking at strikes. I'll try either to buy before specific levels of support and resistance, or after specific levels, or both, right? That's another option.
Yeah. Like if we talk about Amazon, because that's the one that we've been talking about recently, it tends to pin at the round numbers like 3,500, 3,600, 3,400. So you don't want to buy 3,400 calls or 3,600 calls unless you're buying, a few weeks out, because they tend to pin to those. So you might be right on the trade, but end up being wrong on the option because they close it at 3601 and the premium you paid won't make. You know what I mean? Like, so you'll see random usually take like 3,490 or 3,480. So if it does get to 3,600, you get the move. Sorry, 3,500, you get the move that's anticipated within that as well.
Yep. So I saw a question about NVIDIA. This is my NVIDIA chart. So I can share the chart on chat, so you can have the chart in a higher resolution. Let me do that right now.
Sam's got a great question. Expected time for the move?
Any time between now and 2030.
Too bad there's no leaves for 2030, but
yes, it's hard. So there's no there's really no guide to tell you when things are going to happen. So there's you can look at some oscillators. Right, I'm using the TTM squeeze, which also comparing the ATRs to Bollinger Bands, and gives you when the oil Bollings are contracting or expanding. So for example, if I see that the oscillator is circling up, then I know that the move is potentially happening soon on a daily chart, right? If I switch to 2 hours chart, right, that gives you another indication that it will would give you another idea for another indication that when the move is going to happen. But there's really no way to tell, right? If I'm looking at here, right, I was sure that once we sell off an NVIDIA, then it will just go higher, and nobody could have predicted that it's going to pull again, and now it's pushing again. So it's really If you want to play safe, just buy 3 months out, and you will typically do well because the setups are valid. It's just that we're trying to mess around with timing.
Yeah, that's the risk reward conversation, right? We're
Yeah.
trying to pay the least for the cheapest, and it doesn't always work. I think the other thing is you have to realize that. So I think June and January are usually fairly big money leaps. So if you see, I don't know, a huge OI in January or June leaps, it's probably best to kind of avoid those months in general, unless you're closer to the money. It's I guess it's an art that's learned over time for timing, and we still get it wrong all the time, right? And there's just no right answer. I think the great thing about trading now is, I don't know if you remember, Random, when there was only monthly options versus the weeklies.
Yeah.
You had a lot of pinning action back in the monthly days, so it was really a lot harder to do. Now you have the weekly that you get a lot of gyrations, but you have more chances of trying to fire and figure stuff out. But that's the timing is always the question with options, right? Otherwise, we'd be doing commons.
Yeah.
And we just wait for otherwise we just wait for the move to happen, because they do eventually, right? On the strong stocks, it's hard when you have the meme stocks in terms of like laser or stuff like that, right? Those are what's that?
They're all over the place. So.
Yeah, and they're going to be in general, especially after some of the crazy ass moves that they've had in the last 12 months or whatever, the squeezes and stuff like that. It really kind of ruins the charts when you get these massive squeezes. And I think we just tend to ignore it and try to see what the daily action is in a cluster, right? So I think that's also important.
Yeah, you were talking about memes, so I looked at GME that I have for a while. It actually looks pretty decent here.
Yeah, and they all look decent, and then they don't. So like this is the thing I've noticed. I don't know about you, Random, over the last, especially this 2020, is it feels like a lot more of the options driving the stock prices versus stock prices driving the options. And that totally makes sense to me, because they started opening up weeklies about 7 years ago, and now they do. SPY went to 3 times a week. Now Q's 3 times a week. So you have a lot more money at stake to kind of make moves happen. So just it's stuff to keep in mind. And some of it's just experience that that screen time helps with, and you'll be able to see is like, oh, well, you expect that to kind of find a bottom there. And then you look at the action.
So I see a question, Timki, I answered you on chat. I see a question about asking to plot a quick fib chart on 2 different time frames that you do in reality. So give me a ticker and I'll do that.
Well, he gives you a ticker. I think the easy question for hedges is typically my hedges are cash. I prefer to have cash because I think more clearly. Once in a while, I'll take some puts as hedges, and they're usually way out of the money, that if there is catastrophe, they pay big. Otherwise, it's a small loss. But I prefer going to cash and having that available to be able to fire when the reversals kind of present themselves.
So while I'm waiting for the ticker, I saw a question from Sam about why I'm bearish Google. So it's fairly easy to answer. So basically, Google, since 1500 or so, right, it's been trading in this channel, right? And every time it, it hit the top of the channel, it basically faded to the bottom of the channel. Right, and we're just at the top of the channel and we're fading here. So this is why I'm kind of not sure if we're, and this is a crazy market, so you never really know what's going to happen. But if I'm looking here, let's look at the shorter time.
How didn't Google break low of day today? I still have no idea. But that just shows you the strength of it.
on one end, there's the 3K as a magnet here, which is it's people are betting that it's going to go to 3K. On the other hand, it's not unlikely, which is and the reason why I'm short Google doesn't mean that I don't like it long. It's just that I think it's time for it to rest a little bit. Where's the okay? This is what I'm looking. So realistically, I think what potentially can happen is either something like this, right? Which is if I layer in the 50 SMA, so the so somewhere around here, which is just a few weeks before earnings of Google, we'll get the dump, we'll have the 50 SMA catch up, we'll get to the bottom of the channel, and you can see that through all the, I'm sorry that it just, so through all those time frames, every time it hit the bottom of the channel, it had a fairly significant pop after that. So ideally, that's a scenario I'm looking for. On the other hand, since this is a crazy market, it might actually break the channel. So if that happens, then we're going to see a vertical move up. So I don't know which scenario is valid here. It might actually do something like get to the 3K and then do this dump. This is why I'm jumping back and forth on puts and calls, which has not been very successful so far this week. But this is the thought process behind it. Okay, so now I've got a ticker that wants to NVAX, which I have no idea. It's one of those bios which is very hard to predict what's going to happen on them.
Bios in general, man, they're like the Widowmaker or the Rainmaker.
Yeah. So let's start with weekly. Oh, beautiful chart. Okay.
I can't believe this was $2 like a couple of years ago.
Well, the person who bought it at 300 and held it all the way to $2, I think, believes it very well. So I'll start with weekly and I'll look at the big swings, right? This would be one of those swings, and I'm doing it quick and dirty, so it may not be very accurate. So that swing, right? There's a potentially, if I'm looking at a chart, and again, I've never traded MVAX, but there's like a little, cup and handle here, which is not really a cap and handle because it reset, it went to 0, but let's for argument's sake say that it's a cap and handle, right? Something like this. So potentially if it clears 300, then you're going to look at a higher target, but those extensions would get you to 380 and 483. Then I'll switch to dailies, right? And something closer and just reset chart to. So the big swing here would be this one. Right, something like this. And now you can see that I've got confluence of two levels, right? The shorter term, the daily, plus the one from the weekly, around those levels, so 381 to 387. When I'm giving levels, when I'm giving you a range, that means that there is a few levels around there. And then you can also add, this level, as long as you keep the same low, then, it still is relevant. And now you can see that there's additional levels lining up. And then when you want to really, narrow in on daily action, right? And then I'll look at one of the bigger swings here, and I'll just add this one, for example.
Yeah. Well,
right.
While you're just talking about that, I think, do you ever look at the kind of the index that follows this stuff like the IBB or XBI while you're also looking at these individual stocks underneath?
I personally don't. What I might look at, sometimes when I'm looking for an ETF to move, then I'll look for the strongest member of that group, but the other way around, I do not. So, like if I look at IYT, right, which has been garbage so far.
But if you look at IBB, it's got the same kind of NVAX cup and handle, right?
Yeah.
So this is what I kind of do, not necessarily to take the trade, but kind of see if they're kind of lockstep, like if individual stocks still reign over anything else. But these are like the confluences that kind of help me kind of say, okay, well, the the sector looks like it's about to break out, and this chart looks like it's about to break out. So it gives me a bit more confidence to take the trade.
Yeah, and then what you can do is there's like ETFDB, I think that's the website. Yeah, and you can just look for that. So, oops, sorry.
Yeah.
So you just do IBB, right? And it will give you the top components of that ETF somewhere. Yes. Where is that? Holding, performance, holdings. Okay, so those are the top, right? So the 10% of the ETF is Moderna, and then you have Amgen, right? So I'll look at a few of them to see which one looks strongest. So if the sector is breaking out, you take the strongest of the bunch. That would give you a good idea of which one you want to play on a combined sector plus this.
Yeah. That's similar to the RK conversation, which is if RK is going to break out, it's going to be Tesla. It's 10% of their holdings. That's the one that's going to make it move. There's no doubt in my mind. Like if you look at Zoom was down 17% and RK barely flinched. I think it was down 0.5. So it's just not enough heavy weighted stock within its own kind of little ETF structure for it to make any moves. There was a question from Steve regarding trading leaps when we first started. To answer that question from my perspective is I didn't start with leaps. I started years ago with very little money. So I was playing way out of the money. Monthly options. I remember there wasn't any weekly, and I paid my dues because out of the money monthly is just terrible, right? Like it's something I learned is sometimes you got to pay the price for the options a bit more expensive than to hit the lotto ones, because the lotto ones are like I think it's like a couple % chance of hitting in general.
Yeah.
Right, like it's a really
sometimes it's completely like zero chance of hitting that. So that's
yeah, like those delta, anything over like under delta 10, you're really kind of pushing your money. But like I didn't trade leaps in the beginning because I didn't have a lot of money, and if I was putting money in leaps, I couldn't have done anything else.
Well, I actually started with leaps. So I started when I didn't know how to chart and I basically had no idea what I was doing. I was doing leaps, and I started in 2007. So you can imagine that everything got wiped out. But then I continued. So grabbing leaps at 2009 for a year or 2 years out was actually a phenomenal way to build up your account. We are not there right now from an indexes point of view. So, if you get a major sell-off, wait for it to settle, let IV wither and die. And then once you get, typically a major sell-off ends up with, kind of a whimper. This is the time to start building up leaps, and those can easily be, mega beggars. Like I still remember ISRG was one of the first one I traded. It was at 90, and again, I had no idea what I was doing, so I bought 270 calls a year and a half out, and they ended up $70 in the money, like after 12 months. So 27 cents to $90 or something like that. So those were the first trades that I did after wiping out my account in 2008. So it was a good way to fix things.
But I think the important thing that you said was just you have to wait to kind of let the IV wither and die, because if you start buying leaps at like the peak of the down move, you end up paying a lot more premium versus letting it go. After it bounces the first time, it'll probably go sideways for a little bit, unless it's March 2020, and then it's just straight up. But in general, like so we had a big bounce in March 2009, but it kind of went sideways for a while before things really started to move.
Yeah, so there's another thing that I like to do. It actually looks right. And this is completely subjective, but one thing I noticed is that after hours action is typically indicative of what's going to happen the next day. And I don't have really a scientific explanation of that, but if I can draw fibs that some of the middle lines align with pivots of the after hours, that gives me an idea of what potentially could happen tomorrow. Right, so here let me just add this. Right, so if I'm looking at this, and again, this is no scientifics by any way. Sorry. Right, so if I'm looking at this, then I'm expecting it potentially to reach 490 and 469 tomorrow. And the theory behind that, and again, this is my personal theory around that, it may be completely off, but there is not enough volume to drive this to the full fib extension. And the reason why I'm doing this is I noticed often that when I'm doing fibs the following day, is that the previous after hours action actually complies to sub ranges of the same pivot. So the reason why I started doing this is when I'm looking at the following day and I see it going much higher, I draw those fibs, I noticed that the previous after hour action was actually within those middle line pivots. So that's another thing that I'm sometimes doing. All right, so I wouldn't be surprised to see MDB at 490 tomorrow. So that's a long story short. How do you manage so many positions? Do you ever miss a move and it ends up to be a loser? No way that I could trade so many positions at once. Yes, sometimes I miss moves. I try to look pre-market to see if something happens. I try to trade things which are predictable, and I also set up trades and scales in and out based on what I'm expecting. So if I have a level that's going to be resistance, right? Let's go back to Duolingo, right? So Duolingo was looking to sell some at here at 142, and I basically started the day and I put in a sell order and I just waited for it to get filled. And then I looked for another sell around the all-time high. And the moment it reached, it got close to it, and I just didn't have the patience. I just moved and have this filled. Yes, sometimes you miss moves and sometimes you miss trades, but that's life. Any IV tips to choose the correct strike price, please? So it's less about IV, it's more about what you're looking. And I keep telling people, don't look at my exits, look at my entries. Take an exit when you feel comfortable, or you take some money out. I have significantly different risk tolerance than most people. So when you're looking at strikes, it's also consider what you're trying to achieve. So for example, and I think a good example is TBI likes to take profits earlier, which is great. He's far more consistent than I am. So he would probably be completely out of the position here. And if that's the case, then it doesn't really matter. It doesn't make sense for you to take something which is farther out of the money. Remember that if you think about Greeks, delta gives you an idea of, for every dollar that the underlying moves, your option premium would go by delta. When I buy when I bought the 150 here, the delta was probably like 3%. And the reason why I chose 150 is because I said it's very likely that's going to give me an all-time high. If you're looking for just capturing this move, you can, think about the delta here, right? So something like the 135s, you would get the majority of that move. Let's say you took in the money or at the money calls, you would get 70% or 80% of that move in premiums. If you're taking something for just further out of the money, then you're assuming that you're basically swinging for the fence. What I keep telling people is that if you just want to trade pivots, which is completely okay, you'll be far more consistent. But then don't take our strikes, take a lower strike, and you will get more bang for the buck on that, pivot trades. So based on the previous, yes, I'm expecting higher prices. Why sell it? Because tomorrow World War III could start and everything crashes to zero. Just take profits when you have them. And I use alerts for Thinkorswim and TradingView both. I'm a little bit out of time. I don't know about UGP, but
I'm in the same boat. I was just about to say that. I think we can try to do another one in, I don't know, a week or two. Hopefully we can get TBY on here as well, and we can do it together. But I think we're gonna have to cut it for today.
And like the stream, I feel like a YouTuber. Like the stream if you think it's useful. Like, share, and subscribe.
Yeah, so I guess we should do that. Just have a really good weekend, guys. Make sure you take some time to breathe and relax and look at anything but charts or trades or whatever it is. Go outside, have a beer, or eat some food, whatever you need to do to kind of give yourself some breathing room. This is the big weekend before the market kind of has its year-end move. So we gotta be rested, gotta take your time and just breathe.
I second that.
Yeah.
I'll answer a few questions that I see here just to wrap it up. Time frame on MDB. I'm not sure if the question is when we're going to hit that 500 plus targets.
It's like tomorrow, right?
Yeah, well, tomorrow.
I'll take it right now.
But I'll say until I think we hit 500 by September expiration. That's my hope or wish. Do I have a top list that I stick to? Yes, I do have some watch lists that I keep updating them, and I haven't updated them in ages. So, but I can, what I'm watching right now is naturally the Fangs, Shop, W, and the ones you see here. Where is that?
The things that are going to move, right? Like, you don't want to take, I don't know, like something like Altria Group, the ticker symbol MO, that doesn't move more than 50 cents a day. So you trying to take that for a $10 move in a month is going to be most likely a failure, right? So you just got to stick to what other traders are. I know it sounds a bit cliche, but it's momentum, and momentum is what carries these stocks up and down. So
yep. Okay, guys, have a wonderful long weekend. We'll see you tomorrow in chat, and we'll take it from there. Feel free to DM us or ask on chat about orders and about any specific questions. And RG, yes, I'm not always using limit orders, but when I'm away from my screen, I'm expecting it to hit the target, and I'll use limit orders.
Yep, same. I typically use limit orders.
Okay, let me turn this off.
Have a good weekend, everyone. We'll see you guys tomorrow in chat, or actually probably tonight. But
take care, everybody.